for the last month or two, rallies in the metals, silver specifically, have been short covering by CTAs and now Shanghai traders, motivated because they think the Fed may pivot, interest rate rises may back off, what have you. China may reopen their economy, who knows? But those reasons are classic QE type of reasons. We're going to stop raising rates, or we're going to lower rates, or whatever we're going to do. It's going to be an increase in money supply. And so you will see silver, and mostly silver, a little bit of gold, silver and stocks rally at the same time. Whereas it used to be stocks would rally 2% and silver would rally 1%. Now you're getting stocks rallying 1%, silver rallying 4%. Stocks give back that 1% and silver remains up for maybe 5%. That happened recently. That's a microcosm of it. But the reason it's relevant is because the election, if the election is bearish, if the Democrats win, and that makes the election bearish for stocks, shouldn't metals go down too? And I don't know. I don't know. I feel that stocks will go down, and you will have that general, okay, stocks are going down, but that they're not going down because the Fed's tightening. They're going down because of an election reason. And therefore, I don't see as many sellers returning necessarily to put their shorts on if the Democrats win. And when you combine that with the seasonality of buying that comes in starting in really, it's really about Thanksgiving for good reasons for precious metals. I fail to see the election being a strong driver either way for metals, but I'd be pleasantly surprised if the market rallied. But that's like, I tried to make something out of it, but I can't. It's like I can't do it.
Well, I think
because I just feel like they're all nonsense.
No, I think that's okay, and a bit of a mixed reaction. And I think there's a lot of people out there that wonder if one side or the other is really going to have that much of an impact in the way things go forward. Obviously, one of the key drivers that we've seen is people reacting to the Federal Reserve, and certainly an interesting sequence of events since we had that Fed meeting last week, where on the announcement, people took the impression that we may be getting the 50 basis point hike in December, metals spike up, and then got clobbered for the next day or so. Then Thursday or Friday of last week, rebound, and then here's Friday following China potentially reopening and the labor report, which, as you mentioned, was pretty mixed. We had that headline number show 261,000 jobs created, but the households report showed unemployed persons up by 306,000 and employed people down 328,000. So a bit of a mixed reaction. And was that just short covering? And were you a little bit surprised by that? Because same time we saw the similar pattern in gold, and also quite a sell-off in the dollar index over the past couple of days as well. So what were you thinking as all of that unfolded in a pretty eventful last couple of days? The rally in silver was way more than I thought. The bigger surprise, and I'm not going to harp on it, but the bigger surprise is gold was up 3%, over 3%, and that's extremely rare. And what I mean by that is you can see, to get it out of the way before we go back to silver, you can see silver up 6%, 7%, 8%. You won't see gold. If you go back to 1987, I think. I've done the study in 1993, but you rarely see gold up more than 2%. And when it has a 2% up day, statistically, it's down 5% from there 2 weeks from now, which only plays into the whole, the price of gold is managed, which I believe it is. But since then, I have made numerous jokes before getting banned on Twitter, temporarily hopefully, saying, oh, it's up 2%, everybody go home. The Bank of International Settlements is saying it can't go any higher, and they cap it. But they went over 3%. So I was, like flabbergasted. I guess that dates me, right? It was amazing, right? It was a very big move. And so now bringing it back to silver, that was a short covering rally. Bringing it back to silver, the
The Thursday rally was, if you remember, the market rallied in silver going into the Fed meeting, before the Fed meeting, right? You had the little spike that you described selling off, and that was nervous shorts covering before the meeting. God forbid he does something where he eases, right? That little rally like the day before, like right before, like that rally goes back for like, it's not a huge rally, but this massive move we just had just kind of blew the whole scale of everything out, right? So, what, and I think I let readers know about that. I'm like, you're going to have weak hands covering. So you'll see stocks rally before a Fed meeting. You'll see silver have some, in the current environment, rally before a Fed meeting. It's because the speculators are playing the short side in both asset classes right now. And then whenever the news comes out, you can't tell if it's imbalanced until after the news comes out. So people kick their longs out. People got short again in silver. And then, the Thursday, we start ratcheting higher. That smelled to me of a large buy order that was using an algo. And that's just an opinion. But the Friday move really caught me off guard, right? The 6% move, 7% move. And it caught me off guard because I wasn't as long as I wanted to be. I wasn't speculatively long, which kind of, upset me a little bit. I was surprised. I thought I was getting a dip and I was going to be greedy about it. What happened on Friday, and to your point about so you had the Fed come out on Wednesday, and the Fed news wasn't really anything. So the market sold off again. And then Thursday happened, right? You had an orderly rally, but you had a strong market. And then you had Friday, and the NFP comes out, the non-farm payroll number comes out. And like you said, the data was mixed. I think you could see it any way you want to. It's bad, it's good, however you want to focus on it. And if you look at the stock market on Friday, as opposed to silver, you had a stock market on Friday that was whippy. You had a big range. It started higher before the open, went lower after the open, and then it seems like the traders came back from lunch and decided after a couple, rounds of scotch or whatever it is they drink, the algorithms got drunk and started buying it up again. So stocks were whippy and positive one a day, but silver was strong and rock solid. So after the fact, I'm like, why did silver do this? And to your point about China, I'm like, okay, silver's rhyme because of China. Let me see if that's true. Is copper up? You have to look at, is copper up? Yes, that's true. Are the PGMs up? Yes, that helps it. Okay, is gold up? Well, shit, yeah, it's up way too much. Gold is not the most important piece of that, but it was up way too much. I said, okay, so, what's going on? And while I don't understand what's going on, I did underestimate the effect, after checking with some people, of the Shanghai, the Chinese traders now. And I underestimated them because in the past, I used to see them coming and could trade around them because it was one day, it was one day a 2% move. But, if you hear for example, you hear China's going to in the past, you hear China's going to lower rates. You hear China's going to make it easier to invest. You see the base metals, iron will rally day one, day two, copper and aluminum, and then day three, silver, and then gold. And then when gold rallies, you'd hear them say, capital controls, you're speculating too much, a day, a week, a month later, and then all the stuff just washes out. But 6-7% in silver, I was like, wow, that's way more than I thought, the effect that they would have. And the answer, I have to conclude tentatively that the answer is the shorts are being discouraged from being short by their investment advisors, which is why I believe that if you have the CTAs in the US covering, right, and now you have Shanghai traders who had been selling it because of the worsened or even worser situation in China with their own potential recession or whatever it is, that it's a recession. You probably have them more heavily short than usual. When you combine these two normally small to medium-sized shorts in the market with the absolute lack of real investment hedging, right? With a lack of real investment long speculation, you're getting bigger moves now. It's almost like, and physical people would love to hear this, but the futures market is breaking. And it's not going to happen overnight, but it is happening slowly. Now, I'm not saying it can't get good again, but I'm saying the moves are getting more exaggerated. And that's the sign of a market that is breaking. Anyway, long story short, I will not underestimate the potential for China moving the market large going into this buy season, which I'm very excited about. I'm always excited about the seasonality involved in precious metals, but rarely am I excited about silver, which we can talk about if you want.